Hello, everyone, and welcome to another episode of the SubQuery Customer Series. Today, I'm talking to Joran from Centrifuge. Joran, I obviously mangled that pronunciation of your name, but thank you very much for joining us. And why don't we start by introducing yourself and telling us what you do and what Centrifuge does?
Yeah, absolutely. Yeah, thanks for having me, James, on your interview. My name is Jeroen from the Netherlands, and I'm the CTO at Centrifuge. I originally have a background as a kind of full stack software engineer, doing a bunch of different things in basically in Web2. And I joined Centrifuge over like 3.5 years ago, roughly, when it was still pretty early. Centrifuge existed about since 2018. And so I've been CTO over the last few years, and I've been trying to kind of build out the technology of what we're trying to do with real assets. So that's kind of on my background. So talking a little bit about Centrifuge, the short story of what we're trying to do is we're trying to bring credit markets on chain, or in other words, we're trying to tokenize real assets. And that's already a kind of two different ways of looking at what we're doing. Really, we're trying to connect the DeFi and the TradFi worlds. And so the way we're doing that is basically by creating blockchain technologies, previously like smart contracts on Ethereum, and now a blockchain on Substrate that allows like financial institutions, credit funds, and other like users of the financial system to use blockchain technology to tokenize assets, which means like creating an on-chain representation of an asset. So that could be like a mortgage or an invoice or a treasury bill from the US government or any other kind of financial assets, which becomes kind of an NFT as the representation of that. And then the key feature of what we're trying to do with Centrifuge is to actually pull those NFTs together and then allow users to invest in that pool of assets. So rather than investing in like a single mortgage or treasury bill, an investor is actually kind of investing in a pool of treasury bills, for example. And the big benefit there is it kind of creates liquidity for those real assets. So that's kind of what we're trying to do. Ultimately, like what? Oh, go ahead, sorry.
I was just saying it's an interesting situation where you are kind of straddling the brand new DeFi world and Web3 with tokenizing all these different assets, but you also have to kind of deal with the traditional finance world where there's all these old-fashioned equities and securities that you're trying to tokenize. How, like, you kind of have to almost wear two, hats at the same time there when you're probably dealing with both sides of the coin there.
Yeah, no, absolutely. And I think one of the interesting challenges as well is like trying to figure out, right, in the end, there is a huge like credit market and financial market that exists today that is hundreds of billions of dollars, and it's existed for many, many years. And there's been obviously like technical rules that have been built in the last decades and kind of standard practices that have been adopted. And so the question is like, if you look at the financial system today, like what is working and what is not working? And I think a lot of people in DeFi tend to look at finance and say, well, it's not working at all. We're just going to rebuild it entirely from scratch. We don't really know how it works, but still we don't believe it works at all. I think that's quite a bad approach. I think we need to look at the financial markets and determine like what do we think is actually good and what do we think could be improved, and take a lot of lessons from there, because it's not like there is obviously a lot of lessons from hundreds of years of using these current financial systems. And so that's a lot of the good.
A lot of these like traditional securities, like for many years, no average Joe could trade them. You'd need to have enough money to buy a Bloomberg terminal and get a specific certificate from some exchange to be able to even buy or trade these securities. But kind of Web3 is, I guess, I believe, has kind of accelerated that that transition where these old-fashioned kind of exchanges have realized actually no, retail people kind of are sophisticated enough to trade these.
Yeah, exactly. And I think like accessibility for wider audience is really like a really important principle. I think generally in Web3 and for us as well, like you can quite easily get a broker account and buy like Google stock, for example. Like that is quite easy. Like that's a market that's easily accessible. It's public, it's liquid, and so on. but like trying to buy, you could probably buy like a T-bill ETF as well. But like trying to buy like directly like slightly higher yield fixed income debt is much harder, and probably only doable if you're a high net worth individual. Which basically means like people with more net worth get much more access to these markets, and therefore much more of the benefits of them that the average person doesn't. And really the only reason for that, or one of the main reasons for it, is kind of a lack of standardization. Like how to buy Google equity, and generally like equity listed on large financial markets, is entirely standardized. Like you log into your UI and they send some kind of standardized message to someone else, and it's fully standardized. That is not the case at all for a lot of the large part of the financial markets. A big portion that we started with originally is private credit, which is a really interesting use case where you can kind of give direct like loans to smaller kind of fintechs that deal with like mortgages was one example, but also like emerging market credit is interesting. These markets are like really inaccessible. Like there is no way that as a small investor you're going to be able to access them. But there is a lot of opportunity both for like positive outcomes for everybody and financial return that currently is like not possible to get.
And so one of the challenges with exposing all these real world assets, what I understand is the data availability for them and dealing with that data, right?
Yeah, exactly. I mean, I think being able to have standardization about like what an asset is and how it's performing and how it's changing over time and who is interacted with it, how it's changed ownership and so on, is incredibly important for because in the end, like standardization is the main input to create liquidity, and liquidity is important for all participants. And so if you don't have that standardization of data, that's going to be incredibly hard. And so that's a lot of what we're trying to do with Centrifuge, is like creating a standardized way to tokenize assets, a standardized way to attach metadata to those assets, a standardized way to pull those assets together, and kind of a standardized way to trade those assets and so on. And then also like there's other kind of teams in the space that are building other kind of standardized, like other data standardization, like KYC, for example, or secondary markets. There are things that are kind of starting to pick up more and more.
It's interesting how this industry is kind of maturing, where we're getting a lot of these like pieces that everyone else is building, and it's starting to get a point where we're kind of combining them. You know, you mentioned decentralized identity, KYC providers, that kind of stuff. And without all these other people building these things, like, you know, Centrifuge as a whole wouldn't be able to kind of function as well, right?
Yeah, exactly. And I think this is really where the real asset space is still in kind of its infancy, right? I mean, we've been working on this for about 5 years, but the reality is like there's been very little, I would say, kind of composability of real assets so far. I mean, we have had multiple pools that have had like integration with Maker as a large example, like the Maker, the DAI stablecoin, which has been one of the few like real asset like smart contract integrations, and it's been super successful. But beyond that, there's not been very much, and I think that is where like standardization will help us to get more of that, and it's where you get a lot of the benefits of DeFi. If you start to be able to, I mean, I'm not just throwing like ideas out here, right? Like being able to trade like tokens that you've from like real asset investment on Uniswap, that is super interesting. Or if you can reuse your KYC identity from Coinbase when connecting to a Centrifuge pool on Base, that's really where you remove a lot of the current hurdles and you really open up the markets to much more people.
And so Centrifuge, you're using SubQuery in your application right now. How are you kind of utilizing SDK?
Yeah, so we're basically like when issuers of these pools they kind of tokenize the assets, they invest in their pools, they originate assets, they repay assets hopefully at some point, and so on, and they kind of create this history of usage of real assets, and we're using SubQuery to basically create a historical data record of all of these interactions with the real assets on chain. So through the SubQuery, like any investor, but any other interested party can basically easily go and look up like, okay, which pools are there, which tranches do they have, which assets do they have, how much actually has been financed, what is outstanding, and all of this information that is fully standardized. Like it's a single data query for all pools using Centrifuge, which is, I think, really important. The other part of this is that kind of a funny fact is that like coming back to this like, previous point about like merging DeFi and TradFi, a really important point is that like the legal setup of pools that are using our protocol is very similar to how credit would be issued like on TradFi, and there's a lot of the same requirements. So, for example, all of the investors have to do tax reporting based on like their investments in individual asset pools, and we basically use SubQuery for generating that data for tax reporting, which I think is a really like a lot of people would consider a very boring use case potentially, but it's critical. Like without this, there's no way that it could be used today, and I think also it's a building block to eventually get more kind of institutional adoption of these systems. Like they require all of these.
A lot of people probably ignore that kind of taxation aspect of these real world assets, I guess.
Yeah, no, absolutely. Yeah, I think it's very boring to think about, but it's incredibly important. And especially, yeah, like if we eventually want to get what we want to eventually get institutional adoption of like tokenization platforms and start to like we want to get institutions to see the benefits of these systems, and they would expect all of these features to be there. Like for them, it's obvious. Like in their current system, that's just how it works. It's already all present. So it's absolutely critical.
And in a way, you need to have all of these auditing requirements. Otherwise, these big institutions in the the real world space won't even look at you. They won't even they'll kind of laugh you out the door.
Yeah, absolutely, exactly. It's a minimum set of requirements. It's not like exactly. It's what is required to be able to even start talking about it.
Interesting. Well, taxation is very important, isn't it? Two things in life known for sure, and that's death and taxes.
Exactly.
As much as many of us in our industry try to avoid. But I want to talk to you about, Centrifuge hasn't necessarily stayed on one chain. You guys are doing a lot of work to connect assets across different networks, right? What's your strategy with that?
Yeah, exactly. So, I mean, fundamentally, we believe that like liquidity is moving to kind of this multi-chain world. You're starting to see this already. I mean, obviously, I think today 90% of liquidity is still in Ethereum, but it's starting to change quite quickly. At the same time, though, we don't really think it's viable for any like pool that wants to like get financing from DeFi to have to launch on 10 different chains or 20 different chains and manage liquidity across 20 different chains. So instead, what we're doing is we built what we call liquidity pools, which is basically this kind of cross-chain protocol that can be deployed on any EVM chain. That can allow investors on that chain to natively invest and redeem into any pool using Centrifuge. And then all this liquidity is aggregated on Centrifuge chain, and the issuer gets access to that from kind of a single place. But what's really important is that, and it actually comes back to tax reporting again, all of these investors on all of these different chains, again, have to know when did I invest, at what price, when did I redeem, at what price, and so on. And so, like, previously, we would have had to use like subgraph on Ethereum and something else on Polygon and something else on Centrifuge to index all of these like historical transactions. But because of like the multi-chain feature that SubQuery recently launched, we can basically have a single indexing service that queries and stores all of this data across these different chains. You can get kind of a single source of truth of all investment transactions across all chains, which I think is a really powerful feature for our investors, and it's also just a huge time saver on our end.
That's awesome. Yeah, it's great to see that a team is utilizing that multi-chain indexing. It's quite complex, the race conditions, but it's quite useful just having that one endpoint so you can see everywhere you are, like what's happening. And we're getting a lot of interest into that. What do you think? What's the most interesting real world asset that you've seen tokenized so far?
I know. Well, I mean, I know there was a proposal for tokenizing uranium at some point, which we haven't interacted with, but I know there was discussions around that. I do really think that it's maybe not the answer you're looking for, but the NeoSilver case is really interesting. So NeoSilver is one of kind of our earliest partners that we work with. They've been live for like 4 years using blockchain technology. And what's really cool is like they're pretty like they're a smaller like real estate lender in the US that just really believes in like the long-term promise of DeFi. They have gone through a lot of hurdles with us, like the early how to swap DAI to USDC, which was really hard in 2019. Now it's like commonplace, it's really cheap, and many other like hurdles. But in the end, like the way it's working today is they have collateral, which is mortgages. They're locking this in an NFT and then locking their tokens in a vault, and then they're minting DAI, literally creating DAI new stable coins against that collateral, taking it out and then giving it to as hard cash like USD to real estate lenders in the US. And it's a really cool like end-to-end example of how the system can really work. It's still fairly like small scale, and it's like probably the best example we have today. But I think it really shows where the system can go, where you get this like end-to-end like on-chain tokenization, and you have all the benefits. Like if you go to our app today, you can see 300 mortgages over like 4 years of tokenization, all of their history of repayments and so on, and just this really strong, I think, example of how it can be used.
Yeah. All these assets, right, will have to be collateralized in the real world, right, by their nature. There's been issues that, like, there's been people concerned in the past that some assets out there don't have the collateralization that they require, or under collateralized, or it's completely false, the reporting. What is Centrifuge doing differently to kind of ensure or make sure that, you know, what is on chain is actually collateralized somewhere, some place?
Yeah. Yes, this I think is a really good example of what like comes back to what we were talking about before, which is like taking lessons from how the system works today. There is really good examples of how legal structures work for ensuring that the collateral that exists is actually owned by the right person, is actually bankruptcy remote, can actually be recovered in the case of a default, and so on. And so really, issuers using the Centrifuge protocol are using these best practice legal structures already. And then we have done an incredible amount of work with Maker on actually scaling that. So we worked on kind of utilizing taking like the best practices from TradFi and setting up this legal structure that is using this entity called a trustee. That is basically like a regulated financial institution that has a certain set of like rules that they follow, and they kind of control the caching, control the collateral, and so on. And they do that kind of on behalf of the on-chain investors. I don't take my word entirely for this because I'm obviously not a lawyer. But really, to me, this is like how it should work when you have like large institutional investment in TradFi, and then using that for backing an on-chain DeFi native investments. So really combining the best of both worlds. And so like with Maker, that legal structure is both supporting like 250 million of private credit, and in a slightly modified way, also a $1.5 billion like T-bill portfolio from BlockTower. So it really is like quite successful in like Maker has done an incredible amount of due diligence, and it's kind of shown that this really is, or kind of trusted that, verified that legal structure. And that is what we're now also using with our new product that is called Centrifuge Prime, which is basically our kind of all-in-one offering to on-chain like DAOs and DeFi protocols, allowing them to spin up a legal structure that gives them the same level of protections as Maker has, and being able to invest in real assets with that legal structure.
Oh, interesting. Okay. You are absolutely like spanning, you know, the two worlds, right? This kind of DG and DeFi world and the traditional finance world. It's interesting. And I'm sure there's some lawyers in your team that have their work cut out for them dealing with all the intricacies of different.
Yeah, I'm pretty sure we're one of the DeFi startups with the highest legal budget compared to anyone else.
No, interesting. Hey, it's a great. One thing you mentioned before was that you kind of mentioned in passing that someone tried to set up a governance proposal to onboard a particular asset. So is every asset, like, how does governance play a part in Centrifuge? Because you guys are very strong in governance. I know you have been for a long time. How does it play a part in onboarding assets?
Yeah, so what we really try to do is to develop the Centrifuge DAO as kind of this expert in real assets. And a key part of that is that there's a group in the Centrifuge DAO that's called the credit group that is really this expert, like this group of experts from TradFi that have been at these large financial institutions for many years, have dealt with all of these kind of issues and all of these markets, and are ultimately interested in seeing how it can evolve into an on-chain system, and are acting part as like an advisory role, and part as like they're really looking at what are the real assets that are out there, what are being proposed, and then kind of giving reviews of how these are structured and whether they're the right protections and so on. And I think really the way we look at this is that today there's only a few DAOs that are buying real assets. That's like Maker and Alpha and maybe a few others. But I think that will rapidly change in the next year, as you start to see that everybody's realizing that just buying, well, there's kind of two things. One, with the current rates in TradFi, like the current risk-free rate from T-bills, everybody wants to get access to that. It's just not, it's very competitive, and it's a very safe yield. And then secondly, like just relying on the volatility of like online like crypto tokens is not the best investment for DAOs, and there should be some kind of diversification. But the challenge is like, is it realistic to expect all of these DAOs to develop like real asset expertise in-house? I don't really think it is. I mean, maybe the largest ones will continue to have some expertise in-house, but I think a lot of them will want to rely on like trusted third parties, and that's where we really see like the Centrifuge DAO come in, having this like decentralized network of experts supporting this.
No, it makes sense. I'd like to finish with the last question, which is, I asked this to everyone, but if you could go back here on and talk to yourself like 4 years ago before you got into crypto, and give yourself some advice, what would that advice be?
Yeah, I kind of gone back to it, but I was saying before that we should learn as much as possible from the existing financial markets. This is a mistake I absolutely made. I really did think that we can just sorry, what did you say?
You used to think you could replace it all and flip the table.
Excellent. It seems like we could just rebuild it from scratch and not look at what exists today. And I do really think that spending more time diving into how markets work today, and especially looking at like what are the inefficiencies, like where are they working, but also where are they not working. And the interesting part is like if you talk to people in TradFi, they know very well what the big pains are. Like they can spend hours talking about this. So you just need to spend some time trying to talk to those people. And I think that is really a big lesson that I take myself. And I would.
It's a great lesson for everyone that's building any kind of application, right? Just talk to your customers, talk to your potential market, hear their problems. Because often people will tell you their problems, and it's great. It makes it easy to build products to solve them. Jeroen, thank you very much for your time today, and really appreciate sharing a bit more about Centrifuge, about real world assets, and about how you're using SubQuery. Thanks for joining us.
Yeah, thank you so much for having me.
All right, I'll see you guys later. Ciao.
See you.